Hello and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your local real estate news for the month. I'll go ahead and jump right on into these slides. So it is March 2024. Once again, thank you for joining me for this month's update, and we'll go ahead and jump right on into it. I do have an upcoming class on March 21st at 6 p.m. This is a webinar. I'll be teaching this with Ashley from Cross Country Mortgage. It's kind of a 101 homebuyer class. If you are thinking about buying a home, don't know what the process looks like, or want to get a little more information about that, this is a really great free webinar to join. So make sure to sign up for that. Or if you are interested in possibly using down payment assistance for purchasing your home, then this is another really great class for you. It is 5 hours long, so it's a little time commitment, but it is the class that satisfies the prerequisite for using Washington State Housing Finance Commission down payment assistance programs. So there's a few programs that we'll go over in class. There's some statewide options, some more local options. We'll talk about all that. So if you are interested in possibly getting some down payment assistance for purchasing your home, then this is a great class to join us at. And my spring buyer and seller guides are available. So if you would like a copy of one of these guides, just let me know and I'll get it over to you however works best. I can mail it, email it, whatever's easiest. But these are just full of fantastic information if you are looking to buy or sell a home in the next little bit here. And into the news. Seattle area home prices pick up as spring market inches closer. So we are definitely feeling the early spring fever. There's a lot going on in the market, feeling that tick up. A lot more in February than in January. January, as usual, was pretty slow. But February, we are seeing that ramp up towards spring. Pending sales and closed sales, as well as the median home prices in most of Seattle, climbed from January to February. Some of last month's uptick reflects seasonality. As I said, we're in the winter cleanup market. Now we're headed closer to the busier spring market. Median home prices in King County from January to February ticked up 8%. If that doesn't tell you that the market's heating up, I don't know what will. So from 1 month, January to February, prices were 8% higher in King County. And if we look at the median price in King County, $914 in February, up 14% from a year earlier. We are seeing year-over-year increases and then month-over-month increases as well. In King County, the largest year-over-year jump in single-family home prices was in the southwestern part of the county, including Burien and Federal Way, where the median home price of $678,500 was up 16% from 1 year ago. So home prices now in that southwestern King County area are 16% higher than they were a year ago. Heading into last year, there was a lot of people that were saying, oh, there's a crash coming, housing crash coming, and we can see that that very much did not happen. As far as condos, those prices are also climbing. I know we were mainly focused on South King County on this show, but I just want to point out this East Side median condo sold for 23% higher than it did last year. 23% jump on condos on the East Side. So if we look at these single family homes on this graph here for the 4-county region, in King, you can see that huge jump, February 800 last year to 914 500 this year. We're up in all counties year over year, although Pierce and Kitsap have a little bit of a different story to tell than King and Snohomish. For single family homes, closed sales were up in Seattle and down or flat elsewhere as far as the number of closed sales from a year ago, but the prices up all around the region. This is due to the lack of inventory on the market. That shortage of supply is keeping those prices high and promoting them to go even higher. As far as condos, we did have an increase in most areas in the number of closed sales, except for North King County. And median price up again across all regions. North King County up 37% on median price. So we did see an increase in listings on the market from January to February and year over year. From January to February, it was a 38% jump, and we are sitting at about 31% higher than we were at the same time last year. And with the current levels of demand, it would take about 5 weeks to sell through homes in King County, but normally 4 to 6 months is what's considered a healthy market. So we are still in a seller's market despite the shifts that have happened in the last years. It's not as intense of a seller's market as we saw during the pandemic, but it is definitely still a seller's market according to these stats. And there's a lot of pent-up demand, and that is creating a big shift. February, we're starting to see a lot more people jump in, and it is a different market in February than it was in January. And that brings us to our market stat minute. For Southwest King County, we had 0.9 months supply of inventory overall, and 70.7% of homes are going pending in the first 30 days. So there is a shortage of supply, severe shortage of supply throughout Southwest King County. And Southeast King County, we have 0.8 months supply and 77.3% of homes going pending in the first 30 days. Extreme frenzy overall. New Year has kicked into gear with limited inventory and strong buyer demand, which has created many multiple offer situations. As we enter the spring market, we expect to see an increase in the number of resale listings coming to the market, although it is still below normal. Additionally, with an increase in new resale listings comes an increase in new buyers ready to purchase. So we are going to see more homes coming to the market and more buyers coming in the market. How many buyers come into the market may depend on interest rates, but we will talk about that in a little bit. This is the chart for new resale listings coming to Southeast King County. We are the brownie red bar here. So last year we were below where we should have been on inventory, but we started to hug back closer to our annual trend lines here. And as projected, we are headed back closer to the trend lines this year, falling back into what is our normal cycle. And these are total buyer contracts. This kind of represents the buyer demand. January was definitely below where it should have been. We will see if this ticks up from here, but there was just not that many homes available on the market. If there were more homes available, then we would have seen, if interest rates were lower in February, we probably would have seen a few more sales during that time. If we overlap those two, this increasing gap between the bars and the line here shows that we are getting more inventory on the market, which we desperately need. So buyers will have some things to choose from. And for our hyper local breakdown, new listings come in the market. We're up in all areas, both in January and in February, up 67.9% from where we were in Kent a year ago. For pending sales, flat from last month in Kent, but up in every other county. And Auburn, you can see our pending sales are 28% higher than, almost 29% higher than what it was 1 year ago. And median days on market, we are starting to tick down, indicating that we are headed into a more frenzied spring season, as we would generally expect to see this time of year. Median sales price is year over year down in Auburn, but up year over year in all of the other areas, 15 and 16% in Federal Way and Auburn. And in those three, we did tick up from last month. Auburn, I don't know what's going on there, but it did tick down in median sales price from January. And for our home price forecast, what we think is going to happen going forward, these original forecasts from November 2023 were not very optimistic, especially if you compare them to these current updated forecasts, 1.9 to 5.5%. So they're expecting a pretty big difference from what they originally expected. 5.5% increase in home values is a lot different outlook than 1.9. And that trend is hitting all over the board here. All of them have raised their guesses for what home prices will end at since November. So looking more optimistic as we head forward. And For mortgage rates, last month we were at a weekly average of 6.64 and a daily of 6.98. From there, we did kind of go up quite a bit, but now after 5 weeks of raising weekly averages, we have hit our first little decrease. So we are at 6.88, down from 6.94 last week. Here's a quote from Freddie Mac's chief economist: "Evidence that purchase demand remains sensitive to interest rate changes was on display this week as applications rose for the first time in 6 weeks in response to lower rates." So the lower those rates go, the more buyers are going to hop back in the market and the more competition there will be for each of those homes. And if we bring it to today's interest rate, we did get a little bit of a reduction from where we were at 6.85. We have had this little nice downward run here in the past week or so. So that is really good to see heading into the spring market. It's going to hopefully mean that we have a lot more buyers jump in. Some of them have homes to sell, which means more inventory, and we can get those deals rolling. And the Blue Line's Mortgage News Daily, so that's reported far more often than MBA or Freddie Mac. You can see this last run up, and then we have come down pretty quick in the last week. Hopefully we can see this downward trend continue. And mortgage rates are based on the 10-year yield, not based. They're related. And the average historical spread is 1.7. So the 10-year yield on March 1st was at 4.21, and the mortgage rate was 7.1, which is a 2.89 difference. Normally, that difference would be 1.7%, but that gap is much wider right now. But the spread is not always consistent. It actually widens during periods of economic or geopolitical uncertainty, and has been the case in today's market. We've all heard about the Fed raising rates last year to deal with inflation, and that is what is happening here. This is the CPI, the core price index, and this means the inflation was going up a lot, and then the Fed raised interest rates and has gotten the inflation down quite a bit from where it was last year. But if we look at what's happening right now in the inflation, we're headed down, and we've kind of hung out around this 3% mark here, where our goal, the Fed's goal, is to hit 2%. Once we hit 2%, then the Fed will start reducing rates, doing those rate cuts. But we've been kind of hanging out around the 3. A lot of people have said that the Fed should cut rates, and I'm not going to get into whether they should or shouldn't. But if we look at what has happened in the past, the Fed is looking back in this 70s era here, where they reduced rates too quickly, and then inflation shot back up. So this is exactly what they are trying to avoid this time around, is that second spike up. So that's why they're being a little more cautious on reducing those interest rates. Heading forward, I do believe we will see some reductions in the next couple months here, but only time will tell. And just a reminder, I do have those spring buyer and seller guides available, so let me know how to get your copy to you if you would like one. My classes, the pre-home buying workshop on March 21st at 6 p.m. and on Saturday, March 16th, the down payment assistance class. I will have those links somewhere below here, and hope to see you at one of those classes. Thank you so much for joining me today. If you have any questions, please don't hesitate to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area, or an area you're interested in possibly moving to. So reach out. I would love to have a conversation. Thank you so much for joining me for this month's South King County Real Estate Update. I will be back here next month with another update, and I hope to see you at one of the classes later this month. All right, have a good one.